Hey everyone. Ever feel like you're working hard but not really getting anywhere when it comes to your money goals?
It's like you're stuck in a rut.
Yeah, exactly. And you're not alone. We're going to change that today. We're diving into a podcast episode all about how to not feel that way anymore.
It's all about setting the right goals.
Goals, okay.
They're like the coordinates for your money GPS. If you don't know where you're going,
You'll never get there.
exactly.
So this episode we're exploring breaks things down, starting with short-term and long-term goals.
Yeah, those are the building blocks.
How would you explain the difference? Like in simple terms.
Sure. Short-term goals, think pit stops. Things you can hit within a year or less, like building an emergency fund,
Oh, that's a good one.
right? Or finally paying off that credit card debt that's been hanging over your head. Or even just saving up for a vacation. Those little
It's
wins.
definitely motivating. It's like, okay, I can actually DO this.
Right. It builds momentum.
So long-term goals, those are more like the final destination on your financial roadmap.
Exactly.
Yeah.
We're talking big ambitions here.
Right.
Buying a house, saving for retirement, maybe your kid's college fund. These can take years, maybe even decades.
Longer timeline.
Right. But they're the ones that really shape your financial future.
The episode we're looking at also mentions this thing called the SMART method for setting goals. And I gotta admit, sometimes I get lost in all the financial jargon. Does this SMART thing, does it simplify things?
Absolutely.
Yeah.
It makes the whole process much less intimidating
Yeah.
and cuts through all that jargon. Yeah. Just a simple acronym breaks everything down into steps.
Okay, so break it down then. What does SMART actually stand for? And how does it actually work, like in real life?
All right. So the S stands for specific.
Yeah.
Instead of just saying, I want to save money, you need to define exactly what you're saving for and how much you need. A specific goal would be, I want to save $5,000 for a down payment on a new car by next December.
Crystal clear picture.
Right.
Got it. Okay,
Right.
what's M?
M is measurable. Can you track your progress tangibly? How much do you need to save each month to hit that $5,000 goal? Are you on track? Numbers attached to your goals give you a way to actually measure your success.
Okay, makes sense. Specific, measurable. What about A?
A stands for achievable. Got to be honest with yourself here. We all want to win the lottery, but your goals have got to be realistic. It can be challenging, sure, but it should be something you can actually achieve. Don't set yourself up to fail from the get-go.
Right, dream big, but stay grounded.
Exactly. Next up, R for relevant. This is all about asking yourself, does this goal actually matter to me? Is it in line with my values and my vision for my life? Maybe becoming a homeowner isn't your top priority right now. Maybe you'd rather travel the world. Choose goals that align with what you truly want.
Yeah, that's a good point. It's about what success looks like for you.
Exactly. And finally, T stands for time-bound. Deadlines. Give yourself a target date for your goal. Creates that sense of urgency, keeps you focused and on track.
I'm all about deadlines. I procrastinate, but if I've got a deadline, somehow I manage to get it done. I imagine it's even more important for those bigger long-term goals.
Oh, definitely. It's easy to keep putting things off when the deadline feels like it's forever away. But if you break those long-term goals down into smaller chunks with shorter deadlines, it becomes less daunting.
It's like a roadmap with milestones along the way.
Exactly.
The podcast episode also mentions something about creating action plans and tracking your progress. I love a good spreadsheet, but what if spreadsheets aren't your thing?
Totally fine. The key is to find a method that works for you and that you'll actually stick with. Maybe you're a budgeting app person or even just a plain old notebook where you jot down expenses and track savings. The important thing is to check in regularly, make it a habit.
So it's about finding what clicks with you personally.
Exactly. Experiment a bit until you find those tools that keep you engaged and motivated.
Okay, so we've got the SMART method for setting goals, which I'm loving so far, but that's just the first step, right? Now I'm curious about these action plans and strategies for actually reaching those goals. What comes next?
Setting goals is the foundation. Now you got to build the structure. That's where action plans come in. It's about figuring out those concrete steps to take, those actions that'll bridge the gap between where you are now and where you want to be financially.
Okay, let's talk about those action plans then.
So there are a few different strategies we can discuss. Some involve budgeting, finding ways to reduce expenses, maybe even exploring ways to boost your income. Really depends on your individual goals and where you are right now.
And I'm guessing those plans will look different depending on whether we're talking short-term or long-term.
For sure.
Yeah.
A short-term goal like building an emergency fund might involve creating a stricter budget, maybe cutting back on some unnecessary spending for a few months. Whereas long-term goal like retirement, that might involve setting up automatic contributions to a retirement account, maybe looking into different investment options.
I think a lot of people, myself included, sometimes get stuck in this like analysis paralysis phase. We get so overwhelmed by all the choices, all the information, that we end up just not doing anything at all. What advice would you give to someone who's feeling that way?
That's a great question. It's important to remember you don't need all the answers right away. Just start with small, manageable steps. Maybe you spend an hour researching different budgeting methods or different investment options. Even those small actions can help you build momentum and confidence.
Baby steps.
Exactly. And it's okay to make adjustments along the way. Your financial journey is not a straight line. There will be bumps, unexpected expenses, maybe your priorities even change.
Speaking of bumps, the podcast episode also mentioned something about dealing with setbacks, which, let's face it, they're inevitable. How do we bounce back from those financial fumbles?
Well, first of all, it's important to normalize setbacks. They happen to everyone. It's not a sign of failure. They're opportunities to learn and adjust your approach. The key is to not let them completely derail you.
So don't beat yourself up if you overspend 1 month or your investments take a little dip. It's all part of the learning curve.
Exactly. View it as a chance to reflect. What went wrong? Any patterns you noticed that led to the setback? Come up with a plan to prevent it from happening again.
Turning those setbacks into valuable lessons.
Right. Remember, you're in this for the long haul. Financial success is a marathon, not a sprint. It's about consistency, resilience, learning from those experiences.
All right, so far we've covered setting smart goals, making those action plans to reach them, and reframing setbacks as like growth opportunities. Any other key takeaways from this episode our listeners should keep in mind?
One of the most important. Celebrate your wins along the way.
Oh, I love this part. A little celebration never hurt anybody, right?
Especially when it comes to financial milestones, no matter how big or small. Celebrating those wins does wonders for your motivation, keeps you engaged in the process, acknowledges your hard work, reinforces those good habits.
What kind of celebrations are we talking about? Should I be throwing confetti every time I stick to my budget for a week?
Doesn't have to be anything extravagant. It could be as simple as a nice dinner out, buying that book you've been wanting, even just taking an evening to relax. The point is to acknowledge your progress and make the journey more enjoyable.
Finding those little rewards that keep you motivated without derailing your progress?
Exactly. It's all about balance. And of course, don't forget to celebrate those big wins too. Hitting a major savings goal, paying off a big chunk of debt, those are definitely champagne-worthy moments.
Absolutely. I'd like acknowledge and appreciate those big milestones. Reminds you why you're putting in the work and keeps you focused on the bigger picture.
Exactly. Those big wins are even sweeter when you can look back and see all those small, consistent actions that got you there.
So it's a combination of those small celebrations for everyday wins and those bigger celebrations for those big milestones. I love it. It's about making the whole journey feel rewarding and enjoyable, not just a constant grind. Any other advice from this podcast that really resonated with you?
Yeah, they had some really great practical tips, especially for people just starting out or feeling overwhelmed by the whole process. Their first one was, start small.
Makes sense. I think it's easy to get caught up in that I need to change everything right now mentality, but that can be so daunting. Leads to burnout.
Right. Much more effective to pick 1 or 2 achievable goals to focus on first. Maybe you just start by creating a simple budget or tackling your smallest debt. Once you gain momentum and confidence, you can gradually expand your efforts.
It's like building a house. Got to lay a solid foundation first.
Exactly. And it goes back to breaking down those big long-term goals into smaller, manageable steps.
Yeah.
You're much more likely to stick with it if you're not trying to do everything at once.
Okay, start small. What's tip number 2?
This one we already touched on, but it's worth repeating. Celebrate those successes.
Yes. We've established that a little celebration goes a long way. What about their third tip?
And finally, and this one's important, don't give up, even when you face setbacks.
Because, let's be real, setbacks are pretty much guaranteed to happen at some point. It's how we deal with them that matters.
Setbacks are inevitable, but they don't have to define your journey. They're simply part of the process.
So we shouldn't view them as failures, but rather as opportunities to learn and course correct.
Precisely. Analyze what happened, extract those valuable lessons, and keep moving forward. Financial success, like we said, it's a marathon. Persistence and adaptability, those are key.
Like that roadmap analogy, it's not about having a perfectly smooth ride. It's about having a plan and navigating those twists and turns.
And being willing to adjust your route when you need to. Your goals might evolve, your circumstances might change. It's okay. The important thing is to stay engaged and make conscious choices that align with your vision.
So we've covered setting SMART goals, crafting those action plans to reach those goals, and not letting setbacks throw us off course. As we wrap up this first part of our deep dive, what's the one key takeaway you hope our listener is walking away with?
I'd say it's this. Setting clear financial goals is the foundation for achieving financial success. Using tools like the SMART method, creating action plans, and staying committed to the process, you can make huge strides toward those dreams.
I love it. It's about taking control of your finances and building that future you want.
And remember, you don't have to do it alone. Tons of resources out there, from financial advisors to online communities, people to help you along the way.
Absolutely. It's about finding what works best for you and building a support system that keeps you motivated and accountable. So, to our awesome listener, I want to leave you with this. Now that we've laid the groundwork, let's talk about actionable steps. Like, what can you do today to start moving towards those financial dreams? What's one small goal you can set right now?
Could be anything, really. Maybe you set up a budget, or you do some research on a new savings account, or even just commit to packing your lunch for a week instead of eating out.
Oh, yeah, those little things can add up.
They really can. Those small wins build momentum, keep you motivated.
One thing that stuck with me from the episode was the idea of visualizing your goals. I'm a visual person, so a vision board, or even just writing down my goals and putting them where I can see them, that's powerful for me. What do you think about that?
Visualization is a fantastic tool. It helps you connect emotionally with those goals, makes them feel more real, like you're creating a mental map to guide you to where you want to be.
And when you're tempted to stray from your budget, you can look at that vision board and be like, nope, got to stay focused on the big picture.
Exactly. Find those strategies that work for you, keep you connected to your goals, and remember, it's a journey, not a race. There'll be ups and downs, but as long as you keep moving forward, you'll get there.
Speaking of ups and downs, financial success isn't always about making huge changes all at once, right? Sometimes it's about those small, sustainable habits that you can work into your everyday life.
I completely agree. It's not about deprivation. It's about finding that balance, enjoying life, while still making progress.
The episode we're looking at today mentioned a few simple habits, and one that stood out to me was tracking your spending. I used to be terrible at that, just mindlessly swiping my credit card. Then I started tracking, and oh my gosh, I was shocked at how much I was spending on stuff I didn't even need.
It's so easy to lose track when we're not paying attention. But when you start tracking, you become more aware. You can see where you can cut back, make more conscious choices.
It doesn't have to be complicated either. There are apps for that. You can use a spreadsheet or even just a notebook.
The important thing is to find a method you'll stick with. Whether it's an app, spreadsheet, or a good old-fashioned notebook, the act of tracking itself brings that awareness.
Awareness is key.
Yes.
Another habit they highlighted was saving regularly, even small amounts. I know it's tempting to wait until you have enough money, but those small, consistent contributions, they can add up over time thanks to that magical thing called compound interest.
Compound interest is amazing. It's like earning interest on your interest. The earlier you start, the more time your money has to grow.
And setting up an automatic transfer, even if it's just $10 or $20 a week, it can make a huge difference in the long run. It's like making saving a non-negotiable part of your routine.
Exactly. Automating your savings takes the guesswork out of it. You're consistently putting money aside no matter what.
So we've talked about SMART goals, action plans, celebrating wins, all that good stuff. What other insights from this episode really stood out to you?
One of the most powerful takeaways for me was the importance of mindset. Your beliefs about money, those can have a huge impact on your actions and ultimately your results.
It's like that saying, whether you think you can or you think you can't, you're right.
Exactly. If you believe you're bad with money or that financial success is only for certain people, those beliefs can become self-fulfilling prophecies.
So if you think you're destined to be broke, you might not even bother trying to budget or save because why bother?
Right. Your beliefs shape your actions, and your actions create your reality. So if you want to achieve financial success, you have to start by shifting those limiting beliefs, building a more empowering money mindset.
Okay, sounds good in theory, but how do we actually do that? How do we, reprogram our brains to think differently about money?
It all starts with awareness. Pay attention to that self-talk going on in your head. What are you saying to yourself about money? If you notice negative thoughts, challenge them.
Instead of saying, I'll never be able to buy a house, I could say, I'm working towards becoming a homeowner.
Exactly. Reframe those negative thoughts into positive affirmations. Surround yourself with positive influences, maybe books, podcasts, people who inspire you, and celebrate those wins, no matter how small. Every time you hit a financial goal, it reinforces the belief that you are capable.
It's about building that confidence, one step at a time.
Yes. And remember, it's a journey. There'll be setbacks, challenges, but it's all part of the learning process.
Financial success isn't a destination, it's a journey.
You got it. It's about continuous learning, growing, adapting. And you don't have to do it alone. So many resources out there to help.
Speaking of resources, not everyone has equal access to financial education or opportunities. What advice would you give to someone who might be facing systemic barriers or who didn't have the same chances to learn about personal finance?
It's an important point. Systemic inequities exist. Not everyone has the same access. But there are organizations working to address those gaps, providing education and support.
Could you share some of those resources?
Sure. There's the National Foundation for Credit Counseling, or NFCC. They offer free or low-cost counseling and education. The Financial Planning Association, or FPA, has a program where certified financial planners volunteer their time to help people in need. And there are lots of local community organizations and nonprofits that offer workshops, counseling, resources.
And don't forget about all the information available online, websites, podcasts, social media.
Lots of great resources out there. Just do your research, make sure you're getting info from reputable sources, look for nonprofits that provide unbiased education.
And don't be afraid to ask questions. If something's confusing, reach out to a trusted professional.
Absolutely. Knowledge is power. The more you know, the better equipped you'll be to navigate the financial world and achieve those goals.
So as we wrap up the second part of our deep dive, I want to emphasize that everyone's journey is unique. There's no one-size-fits-all approach.
It's about finding what works for you.
Be patient, keep learning, keep growing, and celebrate those wins.
Couldn't said it better myself. It's never too late to start. Take control. Create a brighter future.
Okay, we've talked about setting goals, budgeting, saving, mindset, even resources for support. Now, let's shift gears and talk about something that can be a big source of stress for a lot of people. Debt.
Yeah, debt is a loaded topic, definitely. But it's important to remember, debt is not a moral failing.
It's not about being a good or bad person.
Right. It's a financial tool. It can be used responsibly or irresponsibly.
I think a lot of people feel shame about debt, which makes it even harder to talk about, let alone deal with it.
I agree. First step is to acknowledge it. Be honest with yourself, maybe with your partner, about how you got there. Once you understand the root causes, you can start building that plan to pay it off.
The podcast had some great strategies for managing and paying off debt. Could you walk us through some of those?
Sure. One popular method is the debt snowball. You focus on paying off your smallest debts first, no matter the interest rate.
I like that. It's those quick wins that keep you motivated.
Exactly. You see those debts disappear one by one. Another approach is the debt avalanche. Here, you prioritize those debts with the highest interest rates.
So debt snowball is more about motivation. Debt avalanche is about saving the most money on interest.
You got it. The best method depends on your situation, your personality. Some people need that motivational boost from the snowball. Others are all about that mathematical efficiency of the avalanche.
And there are other strategies too, right? Debt consolidation, balance transfers.
Yes. Debt consolidation is basically taking out a new loan to pay off several smaller ones. Can simplify things, maybe even get you a lower interest rate. But shop around to make sure you're not just dragging things out longer.
And balance transfers, those are about moving your high-interest debt to a card with a lower rate, right?
Yeah, it can save you money on interest, help you pay it off faster. But read the fine print. Make sure you can pay off the balance before that lower rate expires.
Gotta watch out for those sneaky fees and deadlines.
Absolutely. Understand the terms and conditions before you jump in.
The episode also talked about getting to the root of the problem, not just paying off the debt, but preventing it from happening again.
Exactly. Got to figure out why you got into debt in the first place. Was it overspending, not planning ahead, unexpected life stuff? Once you understand the why, you can address those root causes, create better habits.
Sometimes it might even mean getting professional help, like credit counseling or financial therapy.
Yes. If you're struggling, don't hesitate to reach out. Credit counselors can help you make a plan, work with creditors, and learn more about managing your money. Financial therapists can help you with the emotional side of money, breaking those negative patterns.
So it's okay to ask for help. It's a sign of strength.
Absolutely.
So big picture, when it comes to debt, what's the one thing you want our listener to remember?
Debt is not a life sentence. You can overcome this. Planning, action, support. Don't be afraid to ask for help. You can achieve financial freedom.
Love that. Empowerment, not shame. Okay, let's shift gears one more time and talk about something that can be both exciting and a little intimidating: investing. I think a lot of people think investing is only for rich people or people who are already good with money, but that's not true, right?
Not at all. Investing is one of the best ways to build wealth, and it's not just for the elite. With all the online options these days, like robo-advisors and fractional shares, it's more accessible than ever.
I think a lot of people are scared of making mistakes or they just don't know where to begin. What would you tell someone who's curious about investing but feeling hesitant?
First step, educate yourself. Tons of resources out there to learn the basics. Books, websites, podcasts, online courses. Learn about the different types of investments, the risks and rewards, and why it's so important to diversify.
Diversify, meaning spread your investments around, don't put all your eggs in one basket.
Exactly. A mix of stocks, bonds, real estate, other assets helps protect your portfolio if the market goes up or down.
Smart.
Once you have the basics down, you can start looking into different investment options and platforms.
The podcast we're talking about today mention a few different ways to invest, like individual stocks, mutual funds, ETFs, and real estate. Could you break those down a bit more?
Sure. Individual stocks, those are pieces of ownership in a company. Exciting, can be very profitable, but also risking. A single stock can go up or down a lot, so do your research.
Really understand the company before you invest.
Exactly. Mutual funds and ETFs, those are both investment funds, meaning they pool money from lots of investors to buy a diverse range of assets. Good option if you want diversification and someone else to manage it for you.
So you're buying a basket of stocks managed by a pro.
Yep. ETFs, those are similar to mutual funds, but they're traded on the stock market, like individual stocks. Usually lower fees, good option if you're comfortable trading.
And real estate, that's a long-term investment, but it takes a lot of money up front, right?
Real estate can be great for building wealth, but you need to understand the market, the costs, the risks involved.
The episode also talked about having a long-term strategy. I know it's tempting to get caught up in the hype and make quick decisions, but building wealth really is a long game, isn't it?
It's a marathon, not a sprint. You need a long-term vision, ride out those market ups and downs, don't panic sell, and don't chase the hot stocks. Stick to your plan. Stay focused on those long-term goals.
And they had some great advice. Get professional help if you're feeling lost or overwhelmed. A financial advisor can be a lifesaver.
Couldn't agree more. They can give you personalized advice, help you make a plan, manage your portfolio. Don't be afraid to ask for help.
So to sum up, investing isn't just for the wealthy. Anyone can do it. Educate yourself, make a plan, and don't hesitate to get some expert guidance.
It's about time and consistency. The sooner you start, the more time your money has to grow. So don't wait. Start investing today.
Great advice. Okay, we've covered a lot of ground here: goals, budgets, debt, investing. But there's one more piece of the puzzle: protecting yourself and your assets.
You got it. Financial planning isn't just about making money. It's about protecting what you have. That means insurance, estate planning, and a plan for those unexpected curveballs life throws at you.
I think a lot of people think insurance is just a waste of money, but it's really about peace of mind, right? Protecting yourself from financial disaster if something bad happens.
It's a safety net. Helps you avoid financial hardship. You've got health insurance, life insurance, disability insurance, homeowners insurance, auto insurance. Lots to consider.
And you should review your coverage regularly, make sure it still works for you.
Absolutely. Your needs change over time, so check in with your agent once a year. Make sure you've got the right coverage.
The podcast also talked about estate planning, which can be a tough topic to think about, especially if you're younger. But it's not just about what happens after you die, it's about protecting your loved ones.
Estate planning is for everyone. It's about making sure your wishes are respected and your loved ones are taken care of no matter what. You've got your will, your living trust, power of attorney,
Important documents.
and review them every now and then. Update them if big things happen in your life. Marriage, divorce, kids, changes in your finances.
Life throws curveballs. Got to be prepared.
Exactly.
Finally, I want to talk about having a plan for the unexpected. Insurance is great, but you also need an emergency fund for those surprise expenses that pop up.
That emergency fund is peace of mind. It's there for those tough times. Job loss, medical emergency, car breakdown, whatever comes your way.
I know it can be hard to save when you're juggling other goals, but even small contributions add up.
Even $10 a week makes a difference.
The main thing is to just start.
Exactly. Aim for at least 3 to 6 months worth of living expenses in that fund.
And remember, building that strong financial foundation, it's a marathon, not a sprint.
You got it. It's about patience, persistence, being willing to learn. It's a journey.
But it's a journey worth taking. financial security and freedom that can make a huge difference in your life.
Invest in yourself, invest in your knowledge, take charge of your future.
So, as we're wrapping up this part of our deep dive, what's the message you want our listeners to take away?
Take action. Start small, build that momentum, don't be afraid to ask for help. You can achieve financial success.
I love it. It's all about believing in yourself and never giving up on your dreams. Now, let's dive into one of the most important, yet often neglected, parts of personal finance. All right, we've talked about setting goals, budgeting, managing debt, even investing. But there's this whole other side to personal finance that I think we don't always talk about enough, the mental and emotional side of money.
Yeah, psychology of money.
Exactly. It's not just about the numbers. It's about how we think about money, how we feel about it, and how those feelings can sometimes lead us to make, well, not so great decisions.
The podcast we've been diving into today, it really gets into some of those psychological traps we can fall into.
Yeah, I know. I've definitely been there, done that, made those impulse purchases I regretted later. What are some of those psychological factors that play a role in our relationship with money?
One of the big ones is something called loss aversion.
Loss aversion.
Basically, it means we feel the pain of a loss way more strongly than the pleasure of an equal gain. So we might make decisions based on fear, even if they're not the most logical.
Like selling a winning investment too early because you're afraid of losing those gains.
Yeah, that's a classic example.
Uh-huh.
Or holding on to a losing investment for way too long, hoping it'll bounce back, even when all signs point to,
So cut your losses.
exactly, loss aversion. It can really mess with our hands when it comes to money.
Okay, loss aversion. Got it. What else?
Another one is framing bias. It's how the way information is presented can sway our choices, even if the underlying facts are the same.
So, like, the same information can be spun in different ways to make us feel different about it.
Exactly. Think about those marketing tricks. They're pros at framing. A product advertised as 90% fat-free sounds way more appealing than one that's 10% fat, even though it's the same thing.
Oh, yeah, I totally fall for that kind of stuff.
We all do.
Ah.
And it applies to our personal finances, too. Like, think about retirement planning. If you frame it as losing money if you don't save enough, it's going to be way more motivating than focusing on the potential gains you might miss out on.
It's tapping into that loss aversion again. Clever.
It is. Framing is powerful stuff.
Okay, loss aversion, framing bias. Anything else I should watch out for?
Oh, yeah, there's mental accounting. This one's all about how we tend to categorize money in our heads. Like, it comes from different buckets.
In different buckets.
Right, like we treat money from our paycheck differently than money we got as a gift or money we won gambling, even though at the end of the day, it's all just money, right?
Yeah, I guess so. But it does feel different sometimes. Like, I'm more likely to splurge on something if it's birthday money.
That's mental accounting at work. It can lead to some, well, less than ideal financial choices. Like, you might blow through your fun money while ignoring your savings goals.
So how do we, like, outsmart ourselves? How do we overcome these mental biases and make better money decisions?
Awareness is the first step. Once you know about these biases, you can start to spot them in your own thinking. And then you can make a conscious effort to, fight them off.
Like that little devil on your shoulder whispering, spend the money, spend the money.
Exactly. So if loss aversion is your thing, try to reframe your thinking. Focus on the long-term gains, not the short-term hiccups. If you're easily swayed by framing, do your research, get different perspectives. And for mental accounting, create a budget that includes all your money, all your goals. One big picture, no more separate buckets.
It's like unifying your money personality.
I like that. And don't underestimate the power of self-awareness. Understand your own triggers, your spending habits, how you react emotionally to money stuff. The more you know yourself, the better choices you'll make.
So much wisdom in this episode. We've covered setting goals, budgeting, tackling debt, investing, even understanding our own money psychology. As we wrap things up, what's the one message you want our listener to take away from this whole deep dive?
I'd say it's this. Financial well-being is a journey. There will be bumps, there will be detours, but it's a journey worth taking. And remember, you don't have to go it alone.
Absolutely. Find those resources, build your support system, and never be afraid to ask for help.
And most importantly, be kind to yourself. Celebrate those wins, big and small, and never stop learning and growing.
I love that. Well said. To our amazing listener out there, thank you so much for joining us on this deep dive into the world of personal finance. We hope you've learned something new. Maybe even feel a little more empowered to take control of your money and create that future you've always dreamed of.
Until next time, keep learning, keep growing, and keep striving towards financial well-being.
We'll see you in the next deep dive.